Y'all, yeah, I'm going to share my screen. I think I have capacity to do that, but I'm going to try to make the mortgage portion fun for y'all tonight because mortgages are boring, but I'm going to try and teach in a way that hopefully you all will enjoy. So can you see my screen? No. How about now? Which screen can you see?
Yes.
Chris? Yes, perfect. You can see it, right? Okay. So the number one question I get as a mortgage lender is, what's your interest rate? So I thought I'd take 2 to 3 minutes here to explain what actually makes the rates what they are. Okay. A lot of people confuse that the Fed raising rates equals the Fed increasing mortgage rates. When the Fed's talking about raising rates, they're talking short-term money, like car loans, the money that banks trade amongst each other, that they borrow from each other, credit card debt, student loans. They're talking short-term debt. They're not talking mortgages. Mortgages, those rates are based on how the mortgage-backed security or mortgage bond is trading, okay? So this scary looking thing I put up here on the screen actually shows the trading pattern of the mortgage-backed security for the last, I think it's 2 years. So on the left of the screen goes back to like COVID land when, I don't know if you guys have ever heard of coronavirus. No, I didn't think so. But on the left-hand side of the screen there starts right around March of 2020 when the madness really happened, okay? I wish I could go back further for you to show you where rates were before 2020. But short version of a long story, the federal government, everybody freaked out over COVID. Investors sold bonds, stocks, they sold everything. People got out of the market. So the federal government said, what can we do to stimulate the economy? And what they did was they purchased trillions of dollars of these mortgage bonds. The more demand for mortgage bonds, the lower interest rates were. So if you look at the screen from the left to the right, the higher on this chart, the lower rates were. Okay, so this is like a stock ticker. So then you can see right around October, January to April, where all the screen goes wild there from January to April of 2022. That's where my life got really stressful because that's when the federal government stopped buying those bonds and stopped having that artificial demand that was keeping rates so low. So you can see those big long squiggles are how volatile the rates were in that time. I did a lot of drinking, guys. Like it was stressful. Rates would fluctuate a full percent over the, from Friday close of business to Monday. It was crazy talk. So now they've normalized quite a lot and actually have come down quite a bit. So if you look where it says October, where it's kind of the lowest on the screen, that's kind of where we hit our highest point of rates, right? Where Chris was talking about earlier. And then you can see as you go from October to the far right of the screen, that far right there, how the line has come up a little bit on the chart. So the higher on the chart, the lower the rates. Now, why am I showing you this? Because rates are really, really important in what's going on and how homes are being bought and sold, right? But even though rates are higher, there is a huge pent-up demand for homes. And I'm not really even sure what order I put these slides in, so I might bounce around a little bit. But there's a huge demand for homes, okay? So a lot of people are like, oh my God, there's going to be another crash. Not happening, y'all. Not happening. We look at this graph from MBS Highway. It's a subscription that I have. It's showing you in 2006 when the crash happened, your first-time home buyers, the 33-ish-year-old people, you can see how much smaller the population was at that time. So not only did the whole financial crisis happen, the people buying homes, there was a smaller number of people buying homes. I can go into why that is, but that's for another time. We can definitely do Q&A. But as you go forward and you look at the other generations that are coming in to buy homes, your 33-year-old today is akin to a similar amount of people that were in the boomer generation. So you've got millennials and post-millennial generation coming in. There are not enough homes. So it doesn't matter what rates do. We are sitting in a seller's market until not to be morbid, more boomers end up either downsizing out of their homes or whatever. Okay. We're not going to go into any morbid details there. All right. But right now, still a huge housing shortage. No crash is happening. With the slight uptick in rates, it did slow down buyers. It did. Like Chris was saying, buyers, some of them stepped off to the sidelines waiting for rates to come back down. If you take nothing away from what I'm saying tonight, here's my number one thing I want you to take away. If you are thinking about buying a home and you are waiting for rates to come back down, I'm telling you that as soon as rates are in the fives and lower, which is likely to happen within the next year or two, nobody knows how soon that's going to happen. But if you wait until that time, it is going to be like blood in the water and a sharks coming for these houses. You're going to be back in the 30, 40 offers on homes again, because people are stepping away waiting for these rates to come back down. But there's a huge pool of buyers. And if we keep talking here, let's see, what else do I have for us? The NAR, can you guys still see my screen? The NAR puts out statistics on housing shortage. I'm looking at Albany, Schenectady, Troy area here, considered a high housing shortage. A new single family permit, that means like a new start, a new home to be built, is issued every 7 jobs. So that means we are creating jobs here faster than there are homes. So no crash is happening. And if you are a buyer sitting on the sidelines waiting because of rates, right now is your biggest opportunity, because as soon as those rates come back down, there's going to be another flood to the market of buyers. Okay.
Exactly.
So I hope that this is helpful and effective. A lot of my sources, let's see what my time is here. A lot of my sources that I follow personally are expecting rates to drop as soon as this summer. If you want to sell a home, there's no homes on the market right now. So sell now and start shopping now if you are a buyer. And that is not for me to make additional commission, because I'm just telling you how I see it. Huge opportunity for buyers and for sellers right now before the buyers come flooding back to the market. It's crazy, actually, isn't it, Chris, how few homes are on the market right now?
It is, yeah. One of my clients actually I've hooked up with in September, and he's got some specific criteria in the Saratoga area, but there's been one home since September that I've been able to show him that actually fits his criteria. Think about
Yeah.
that. In 4 months, only one home has popped up that he even had interested in, and we didn't put an offer in, which is fine, but I feel bad
And
for him, you know? But
yeah,
it's
and
like,
as buyers, don't take that as like a discouragement, because if we have you ready to go now, when those houses come popping on the market, you're going to be able to jump on them right away, because Chris has all the up-to-date info, and you'll be pre-approved by my team, of course, but pre-approved and ready to go, ready to shop.
yeah,
It's really, truly a huge opportunity, because you can always refinance. Well, I shouldn't say always. The opportunity is out there to refinance, assuming you qualify at a later date. And if you pick a lender like us that services their loans for you, so you make your payments to Movement Mortgage, we can do the servicing. And when it's time for the refi, we can do it at a much lower cost. And I can answer questions about that privately as
yeah.
far as those costs
And to
go.
tack on to that, thank you for saying that. Rent is projected to go up 5 to 7% around here. But guess what? The average for a 30-year loan for a house, the average monthly rate does not change over the entirety of the 30-year loan. That's one of the benefits of home ownership. In addition, you're actually building equity. A house is the biggest asset you'll ever own in your life. You're building equity. Well, guess what? 10% houses went up last year. That might be, we're not going to reach maybe 10% increase in prices, maybe 5 to 8%, but you're still going to be able to build equity if you get in and buy a home rather than keep renting, and rent is still going up. You know why? Because the demand for renters keeps going up. So that is what it is.
Housing shortage.
Because of the housing shortage, everybody's renting and rent keeps going up, and that's what it is. So I totally agree with what you're saying. Definitely want to seize this opportunity if you can, because the shark analogy is great. That they're going to be sharks similar to when the pandemic started. Probably not as crazy, but similar to that. You know what I mean?
Yeah. For anybody that might be watching, listening, or whatever, if you just want to have a conversation, about what I need to do to get prepared to buy a home, because a lot of questions I get are, I don't have any money saved for a down payment. Well, we have the state of New York grant program that will actually, the state will give you 3% down towards your home. You may qualify for that. There's a lot of options out there. And even if you don't qualify right now, we can get you on a game plan to help you in 6 months, a year, 10 years from now. Who cares? If you don't know what the numbers are, then there's no way to create a plan to get there.
Exactly. That's why it's important, even if you're not looking to buy or sell to the end of the year, it's important to talk to a realtor, talk to a lender now, start budgeting, start preparing, because you want to be prepared. And that's what I've been telling buyers. I made a video last week. Even if you're not buying till the summer, talk to a realtor now so you can be prepared to get pre-approved. Because guess what? What I was saying before, there's buyers and then there's motivated buyers, right? I think what's going to happen this year, we're going to see motivated buyers. They're going to be ready. They're going to be pre-approved. They're going to be waiting for this opportunity that have been sitting on the sidelines last year. So you need to be ready to compete as a buyer. You're going to be ready to compete against these other buyers because guess what? They're prepared. They're going to be ready and they're going to come in with a strong offer. So are you going to beat that strong offer? If you're not prepared, then you might not. So that's why I think it's important to talk to a realtor and a lender for sure.
Yeah. And with like no pressure either. Like
Yeah,
when Chris and I are saying things like now, there's literally no pressure. It's like they say the best day to buy real estate was 5 years ago, and the second best time to buy real estate is today. But there's no pressure. So like if you call me, you apply for a loan, you don't have to immediately go buy a house. We can talk about it. It can be a 6-month, 6-year game plan, right? So no pressure from either.
Me and Anna and I are super laid back, so we're chill. We're ready to
I
have
love that Chris thinks I'm laid back. I am the most intense person. I'm a lot of fun, but I'm like,
yeah. Well, you've been laid back for this call, so I appreciate that. I know. Yeah. I don't know what's going to happen after the call.